Inflation eased again in December, giving relief to households and businesses nationwide and offering more assurance to economic policymakers that steep price increases are pulling back without triggering massive consequences for the broader economy. The latest inflation data, released Thursday by the Bureau of Labor Statistics, showed prices were 6.5% higher in December than they were a year before, and fell 0.1% compared with November, the first time prices have dropped month over month since May 2020. The annual rate of price increases was the slowest since October 2021. Inflation is still well above normal levels, and the economy remains vulnerable to shocks that could send prices back up. But officials and American families have been desperate for signs that the Federal Reserve's fight against inflation is working and that the economy, especially the labor market, will continue to stabilize in 2023. What we saw in the inflation data is that what the Fed is doing is working, said Betsy Stevenson, an economist at the University of Michigan and a member of the Council of Economic Advisers in the Obama administration. And so far, it hasn't slowed the economy so much that we've seen net losses in jobs. Stocks closed up slightly on the news. The Dow Jones Industrial Average rose nearly 217 points, or 0.6%. The S&P 500 was up 0.3%, and the Nasdaq was up 0.6%. The December report, known as the Consumer Price Index, follows encouraging news from October and November, when prices fell more than expected, helping to alleviate worries of a one-off drop. Falling costs for gasoline significantly helped pull prices down in December, more than offsetting a continued rise in shelter costs. In remarks Thursday, President Biden said falling gas prices were a major reason American families had some real breathing room. Prices for used cars and trucks fell 2.5% in December, the sixth consecutive month of declines. Airfares fell 3.1%, slightly better than in November. The rate of food cost increases improved to 0.3% in December, down from 0.5% in November. Egg costs, however, jumped 11.1% as the industry deals with a severe outbreak of avian flu. Housing costs continue to go up, rising 7.5% over the past year and accounting for more than half of the total increase in a measure known as core inflation, which strips out more volatile categories such as food and energy. Specifically, rents climbed 0.8% in December, as they had in November. Other notable increases included household furnishings and operations, up 6.7%, medical care, up 4%, and new vehicles, up 5.9%. Economists have many ways to look under the hood of the inflation report to tease out whether supply chains are improving or worker shortages are putting pressure on prices. Wendy Edelberg, the director of the Hamilton Project and a senior fellow in economic studies at the Brookings Institution, a center-left DC-based think tank, said she has been particularly focused on goods prices, which soared earlier in the pandemic as people shifted their spending from services to things. That could mean eating out less at restaurants, and instead getting new kitchen equipment. If we didn't see deflation in this category, it'd give me a lot less hope that we were really going to get inflation under control without a whole lot of pain, Edelberg said. And indeed, 3 months of outright declines, that is spectacular news. Despite the ongoing challenges, many experts remain optimistic about the future of inflation and the economy as a whole. The Federal Reserve's efforts to combat inflation appear to be working, and the economy, especially the labor market, is expected to continue stabilizing in 2023. Additionally, the recent decrease in prices for goods and services, such as gasoline and airfare, is providing some much-needed relief for American families. However, it is important to note that inflation is still well above normal levels, and the economy remains vulnerable to shocks that could send prices back up. The Fed will need to continue monitoring the situation closely and make adjustments to their monetary policy as needed. In the meantime, policymakers and businesses will need to stay vigilant and adapt to the changing economic landscape. This may include implementing new strategies to help ease the burden of rising housing costs, and finding ways to address worker shortages and improve supply chains. Overall, the recent inflation data provides some hope that the economy is on the right track, but there is still much work to be done to ensure that this trend continues. The Federal Reserve and other economic policymakers will need to continue their efforts to keep inflation under control and support the ongoing recovery of the broader economy. It's important to keep in mind that even though inflation is showing signs of slowing, it is still well above normal levels, and as such, policymakers need to continue to be vigilant in their efforts to keep it under control. The future of the economy depends on it.